Love this guy. David Garofalo is the chairman and CEO of Gold Royalty Corp. And their stock symbol is NYSE.
And the pronunciation is Garofalo.
Okay. Okay.
You're so Irish.
You've been on the show so many times.
I've been told. Okay.
No, just stop. David, how are you?
Good to see you.
I'm good, thanks.
David's been in studio. Hey,
I know I hate when I screw up. David, I'm sorry. Mr. Garofalo, I'm sorry.
It's all good.
I have an idea for you because you are pretty remarkable in what you do. That I think that you should do a regular podcast just with you hosting, because it gives an insight. You need to be doing something, not only with us, because we love having you on there for a gold guy, but I'm talking about you should be doing the stuff that you guys are doing there. I think investors would be really interesting to see that you guys are king of the gold. I mean, you guys really are the top of the pile on this stuff. Talk about what you guys are up to these days, because inflation is still a real thing. You've always said that gold is a hedge against inflation. Gold is now up from the time we first spoke to you, $2,000 per ounce up to $5,000 an ounce plus. I'll let you take it from there.
Yeah, look, I think the trajectory is very deeply entrenched, and it's really about the fact that the government is dealing with a massive amount of debt that they can't hope to service. And so the only way to deal with the debt is to inflate it away, to print currency, to debase their fiat currency and debase the debt. I wouldn't want to be a holder of treasuries right now, because it can only go in one direction. And over a 50-year horizon, gold has only gone in one direction, from $35 an ounce to $5,500 an ounce most recently. And that's entirely a function of the monetary easing we're seeing across the Western world. I think
if you think rising gold prices are good for investors, how does that affect guys like? I mean, you'd obviously think it affects guys like you, but it's not always a positive thing, because if it goes too high too fast and such. Talk about your relationship with prices.
Yeah, look, I think what it means is that the purchasing power of your dollars, the dollars in your wallet, are going down. They've gone down 99% in 50 years. So just wrap your mind around that. $1 in 1971 is worth a penny today. That's because of the continued debasement of fiat currency. The temptation is too great when you can print money to print money, right? And that's what they've done almost on an exponential basis over 50 years. So it's not great for the economy. It's not great for your purchasing power, not great for your savings, but that's why you have gold as a hedge within a diversified portfolio that helps protect the purchasing power of your savings. It's such an important part of it. What we do in the royalty business is try to protect our investors from inflation in the mining business, because mining companies are not immune from inflation. As the gold price goes up, their operating cost goes up. As a royalty holder, we own a percentage of the top line of the gross from a mine site, so we completely protect and insulate our investors from inflation while giving them unmitigated leverage to higher gold prices.
David Garofalo is chairman CEO, Gold Royalty Corp. Ticker symbol is NYSE. David, in the James Bond documentary Goldfinger, there's a villain, Ulrich Goldfinger, who wants to radiate all the gold in Fort Knox in the United States, obviously to make his gold supply that much more, the increase as far as the price of it. What would cause gold to decrease in value in a historic way?
Yeah, because they're only making so much of it, David.
Yeah.
True enough. Actually, we're only, as an industry, only adding about 2% to global supply per year. There's about 220,000 metric tons of gold sitting above the Earth's surface that's been mined since the beginning of time. Only fits in 4 Olympic-sized swimming pools. So it's from a volumetric standpoint, it's
all
tiny.
the gold in the world fits inside of 4 Olympic-sized pools. That's it?
That's it.
Hence
there
the name Precious. That's the name.
That's why.
Right? Wow.
And there's a remarkable inelasticity of supply to price. So yeah, the gold price has gone up, but supply has actually been going down, the amount of gold produced, because the industry has been underinvesting in exploration for about 15 years. We're only starting to see capital markets pay attention to the junior explorers that do all the heavy lifting and discovery. They haven't had consistent access to capital to replace depleting reserves. So we've actually seen reserves in the ground, unmined reserves, decline by about 40% over the last 15 years. So that is unlikely to reverse trajectory anytime soon, because from discovery to first production, typically you're looking 15 to 20 years. It's such a capital intensive, socially complex endeavor to undertake to build a new mine to replace depleting supply. So there isn't a supply reaction to higher gold prices.
Hey, David, when you talk about Gold Royalty and streaming as a company, what is the streaming part of it? Explain that to us in simple terms.
Yeah, royalties are a percentage of the gross. You get paid in cash. When you take a stream off of an asset, you're actually getting paid in kind. In other words, you're getting a percentage of the ounces. And generally, you're going to pay a fixed dollar per ounce to the producer for those ounces. That's the difference between a stream and a royalty. Again, royalty, you're just getting a percentage of all of the revenue from the mine site, whereas with a stream, you're getting a percentage of the production and you're getting paid in ounces that you can then, you can either stockpile or you can sell. Virtually all of our interests are royalty interests. We have 257 assets in the portfolio. 256 of them are royalties. We have one stream. It's actually a copper stream on a project in Bosnia.
Hey, I have a question. When we first spoke to you, you were breaking in, I think it was 2024, you were breaking into free cash flow. What does
That's
that
right.
look, has that continued along the way? Has there been a pause? Because I can only imagine it's only gone in the right direction, correct?
No, it's exponential. The 2025 was our first year of positive free cash flow. And just to put it in perspective, we only founded the company in March of 2021. Next week, we're celebrating our 10th anniversary on the NYSE when we IPO'd. And in that time, we've grown the royalty portfolio from 18 royalties, 14-fold to 257 royalties. And we've gone from a company that was consuming cash, investing in its business, to one that has over 250 royalties. Last year generated over $10 million of free cash flow. By the end of this decade, at $5,000 gold, we'll be generating north of $100 million per annum of positive free cash flow from the existing royalties. And I should hasten to add, all of our royalties are bought and paid for. We don't have to put another dime in them. We don't have any capital installments. We don't have any cash calls. So that growth that I'm talking about, that growth in our free cash flow, is completely unmitigated. We don't have to pay for it. It's just harvesting what we've invested in over the last 5 years and building out the business to the size that it's enjoyed.
So does that mean, considering that everything's kind of locked and loaded for 2026, there's not much to do, so to speak, for 2026 other than invest for the future? I'm assuming that's the next sort of focus for you folks?
Yeah, precisely. We're completely debt-free, I should add, and we have a $150 million line of credit with 3 Canadian banks. It's completely undrawn, so it's available to us. And together with the cash and in-the-money warrants that we have about $200 million of dry powder that we can use to invest on a completely undiluted basis into new royalty opportunities. And we've done that over the last couple of months. We've deployed $100 million in 2 new cash flowing royalties, two in Brazil actually, that will add significantly to our cash flow profile over the course of this year. So we're going to see a multiple increase in our free cash flow in 2026 and exponential over the next 5 years as many of our large scale projects achieve full scale production.
We told you so.
Exactly.
People. I'm the first one to get him on the air. I should get the credit for it. For
David Garofalo.
all of our viewers need to cut me a little something.
Chairman, CEO, Gold Royalty Corp. NYSC is the ticker symbol. There is gold in them thar hills.